S&P continues to push higher, and we're seeing massive diversification. You can see that with the breakout right here, and then the push. NASDAQ continues to break out. Now we're heading towards that 15,000 after hours because we had some good earnings we're about to go over. Smart money, dumb money is at one of the highest disparities that we have on record. Small speculators change their position. We'll talk about what that means. Tesla clearly breaking out. We'll talk about the next levels to watch. Semiconductors breaking a key level, and some are closing at all-time highs. Oracle's statement after earnings about AI and how it's developing throughout their company. AMD and their conference tomorrow. CPI and what to expect tomorrow morning. We have a lot to get into. Let's get started. Hey everybody, welcome back. First and foremost, tell me about the mic tonight. I moved the position of the mic and I updated it. There was some reverb, so this should be a little bit better. It should be clearer, but if it's not, just let me know. I'm not going to have time to record this and then listen to it and then re-record it. So just let me know and we'll go from there. AMD is starting to see more and more interest. We saw that line right here and how we held the 116.79 level. We're going to want to watch that 116.79. That looks like major support now. I don't see any reason why that would change. You can see the breakout here. What I would want to focus on more than anything, if I was interested in this name, is how this was our highest close. And now this is our highest close. So now we're getting higher closes. That's exactly what we want to see from our leading names. Now tomorrow they have a conference. They'll come out with their product. We'll all take a look at it. Maybe it'll go better than Apple's $4,000 goggles. We'll have to see. But the bottom line is NVIDIA is never going to be able to meet demand for product. So people are going to have to find an alternative. That alternative looks like AMD. If you take a look here at the weekly, you can see a couple things that I think are pretty glaring, but you're seeing these 3-bar patterns, and these are patterns that we trade in the Alpha Chasers community. 1, 2, 3, then you start breaking out. I love these little dojis. Now today's day 1, so we'll see if we're going to get them or not. Of course, we have a lot of data that is supposed to come out tomorrow and also this evening. We're going to talk about Oracle's data, but you have to start looking at some of these names. I'm going to be really quick and to the point. You have to start looking at some of these names, and I can't stress this enough. You have to start paying attention to what's really going on out there. After NVIDIA's earnings, I was pretty clear about this, and if you've been listening to this, we've been doing it for about a year and a half here. I was pretty adamant about this. It's been about 4 weeks now that this is not going to be like a cycle that most people are used to. Most people that have been trading for 10 years have never seen a cycle like this. Okay, so you have a huge upcycle in the semiconductor space. This does not go on for 10 months. This goes on for years. If you really want to get into it, Druckenmiller has a really good speech he did on Bloomberg. I'll subscribe to the channel, and I'm going to cut it up and put out the clips because it's about 40 minutes long, but there's 3 minutes in there that you really need to listen to. I'll have time this evening to do that actually, and I'll post it. So make sure you subscribe to the channel so you can hear that, but you need to understand what's really going on here, not get into the nuances, not get into the social media nonsense, but actually understand what is so exciting about what is happening. And when you start getting it, you'll be on board with it. But these are flags. We're not even able to get down 50% of this bar. You know, one of your true tests with any kind of breakout is you want to get down to that 50% line, then see how you act. I can't even get there. I can't even get down to that 346, which actually, if you take a look at this bar, measures perfectly with a test of major support. I can't even get there. So for me to feel that I should be bearish in some way here, it's just frolics. I mean, I don't get it. Now, I'm not saying that there's not things out there that don't concern me or we couldn't have issues. Of course we could have issues, and of course we could have pullbacks. That goes without saying. But what I'm saying is, if NVIDIA is in such a place that Goldman is basically coming out and saying that their business model and all the estimates are obsolete, they can't meet demand, AMD, right? They're going to fill the shoes. So you have to start looking at, well, who's the next players? Well, AVGO basically came out and said for their switches and routers, in regards to what will be utilized for AI, they're up 100% year over year. Now, the reason that the stock came in was they said the other portions of their business are getting slower. Well, that just makes sense because companies are going to go where they're going to get the most bang for their buck. This is very difficult. This is when we traded today and did exceptionally well with. I did stock and calls and did very well with it. This is very hard to not look at this and just realize that in one day we completely encapsulated the body of the shooting star on the way down. Today's only Monday. Now, we had some hurdles to get through, and so that's obviously going to make people gun shy. But when you start seeing patterns like this, where you're breaking out, right? You're breaking out, you had earnings, you're breaking out ahead of it because of what happened with NVIDIA. So that earnings move is already discounted. You go sideways, you consolidate, and then you break out of there. You need to pay attention to these kinds of moves. This is substantive stuff, and this is not, oh, it's going to be 2 quarters of this. No, this is the type of thing that when you start seeing these secular moves, they're 2 to 3 years. So people are going to be, in my opinion, people are going to be very shocked about what's going on out there. I can't stress that enough. Are there going to be pullbacks? Yeah, there's going to be pullbacks, but today was not one of those days. Today was one of those days where we curled and the SOXX started breaking out, okay? There's a reason why Taiwan Semi is breaking out the way that it is, all right? And people are going to sit on the sidelines with it and say, oh, well, China's going to invade. Okay, well, they didn't invade today, and maybe they don't invade tomorrow, and maybe they don't invade for 18 months. Are you going to sit on the sidelines for 18 months waiting for the invasion because now you're a geopolitical expert? I mean, you start connecting these dots, guys. I can't stress it enough, and I hate to be this objective about it and like this curt about it, but you're going to look back in a couple of years over this entire cycle, and you're not going to believe the amount of moves that some of these stocks have. It's not going to be a day. It's going to be years. What I would do is I would start looking at when they come out with earnings and what they're saying, okay? Oracle comes out with earnings tonight. They beat and exceeded expectations. They raised guidance. Now, to be clear, this is rare. There's a running joke about Ellison that he never comes out and beats earnings estimates on purpose because he just wants to go out there and then just buy his own stock back in the open market. So it's always rule of thumb, you buy it after earnings because it always comes in. Well, that's not the case. $1.67, $1.58. 13.8 billion beat 13.73. Okay, this is highly unusual for Oracle to come out like this. This is a statement by Larry tonight. Oracle's Gen 2 cloud has quickly become the #1 choice for running generative AI workloads. Okay, this kind of stuff, this is the kind of stuff where people start paying attention to your stock, not for a quarter, but for years. Now, they beat on top and bottom. They touted NVIDIA and their development with NVIDIA and why that's going to be so important. And I think that's definitely something we want to pay attention to. And it just tells you how they beat year over year. And it tells us about their cloud services, how things are getting better. Infrastructure cloud revenue was up 76% year over year. Infrastructure cloud revenue, 76%. Okay, that's staggering. That's a staggering number for a multi-billion-dollar company. Okay, and that was worth paying attention to. Now, if you look at this and talk about their growth rate, these are the types of things you really have to pay attention to when they say things like this. Our infrastructure growth rate has been accelerating with 63% growth for the full year. 77% growth in the fourth quarter. Our cloud applications growth rate also accelerated. Both of our strategic cloud businesses are getting bigger and growing faster. Now, at the time of recording this, I have not heard the conference call yet, which I'm sure they're going to tout things even more. But I think this is also a very important statement. Oracle highlighted the fact that NVIDIA is using the company's clusters for AI infrastructure. Chairman CTO Ellison noted Oracle's GPU clusters are built using the highest bandwidth and lowest latency RDMA network. Okay, so in other words, we have an edge, as right on here, and he even says it right here. As a result, the cutting edge companies doing LLM development, such as Mosaic, Cohere, plus 30 other AI development companies have recently signed contracts to purchase more than $2 billion of capacity in Oracle's Gen 2 cloud. Okay, when people start connecting these dots and start realizing the amount of money that's going to be passed along through these companies, they're going to get involved. All right, so there's a couple different things that you should take from this. The number one thing you should take away from it is they just purchased 30 companies just purchased $2 billion in capacity of Oracle's Gen 2 cloud, right? So then what you would do is start going through these companies, seeing who owns them, And then which ones are public, which ones are not, who has stakes in them, things along those lines. Who are their suppliers that are public? Who are their vendors that are public, right? You start drilling into this and you will find gems. Now, I want to be really clear about what I'm stating here. I'm not stating that we're just going to magically go up every day. I'm talking about the fact that you have a cycle here and you want to pay attention to the cycle. CPIs tomorrow, if it comes in higher, the market's going to go down. I don't know if CPI is going to come in higher or not. My bet is that it doesn't. We'll be live tomorrow for the pre-market for it. But you need to view the market as a stool. And I've done this a couple times, and you're going to have to deal with my basic drawing. But here's macro. And this is what we've been focused on all this time, right? We've been focused on the macro. And it's because we have to watch CPI, we have to look at oil. Now we're looking at financial conditions. Then you have fundamentals of a company. Okay? And those fundamentals, is the company making money? Is the company not making money? And then, of course, you have technicals in the middle. Is the stock above its 200-day moving average? Whatever technicals you use. And I know this leg is shorter. That is not on purpose. That is my childlike drawing. So if you see how this is playing out, if you're sitting on a stool, there are times you lean on the front of the stool, right? And the stool might lean a certain way, and there are times where you're going to lean on the back of the stool. Each one of these have a factor in whether or not Oracle go up. At the same time, sometimes you're going to lean on macro, technical, or fundamentals more than another time. I'm pointing that out because you need to take a look at what's truly happening here. You have the majority of people, if you start watching, they're all focused on this one leg. They're still focused on inflation and what's going on over there. The inflation trade's over. Okay? No matter what happens, inflation will come down. It's either not going to come down as fast as it was or not. So you have all these people staring at this one stool leg, right? While over here, this stool leg, well, let me make that a little bit better. While this stool leg all of a sudden became the important one because we shifted our weight. Now it's fundamentals. Well, if Oracle's going to start adding $2 billion in capacity like that, don't you think other companies are going to start doing that too? Don't you think that if they're going to add $2 billion in capacity, there's going to be a reason and a product that they're going to sell behind it? And let's be clear about this. The consumer is the product. Amazon's buying this, Microsoft's buying this, Google's getting involved so that they can use AI to keep our attention more or something like that. This is very different than .com. .com worked because telecom equipment manufacturers, right? That's why it worked. We had moves like this with Cisco. And why did we have moves like this? Well, we had moves like this because we needed to increase bandwidth, and telecommunications companies, Verizon, AT&T, were trying to increase their bandwidth so that you could put more hosting sites out there, et cetera, okay? That is very different than what's going on. When the consumers stopped buying, this all came down. Okay? This is corporations that's buying, right? It's not mom and pop going out and buying a $40,000 chip, and that's what these chips cost from NVIDIA, by the way, $40,000. It's corporations. That's who their clients are. Now, if we take a look at what's going on with Tesla, we can clearly see our level right here. We can see how we are breaking out, and we can see how we are reacting to that level, right? So that's a pretty clear level. That's pretty clean, exactly what's going on there. I would suggest that you just watch the next level. This is something I actually played around with again today and have been in for a while now. I think we're heading to fill that gap at a minimum. And then once you start filling that gap and you get to that neckline, you start really getting involved with these DTLs. DTLs is downward trend line. And this has been your major downward trend line. So you can actually still get up to about that 290 level and still be in a downward trend. And that's something that I think that we should be paying attention to. I still like this. I still think it looks great. I do want to say one thing about NVIDIA and playing around with this today. This 395 level, for whatever reason, if you drill into this, if you're playing around with this, just be aware of this particular level. And again, I want to just be clear that this video was recorded before Oracle had its conference call, so not really sure how that's going to go. But if we draw a line right from here, right, you're going to see that 394.69, okay? And that's that wick, that's where that AVGO is, where they decided that they were going to sell everything, gaps over it, tries to get over it, they decide they're going to sell again, battleground, 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 look where you closed, okay? So that's a demarcation line that you're going to want to watch tomorrow if you are trading NVIDIA. Now, I went over all these earnings, we're talking about all this growth that's happening. If you don't believe the growth, that's entirely up to you. You can believe whatever you want to believe. And you're not alone. Right now, you're seeing small speculators, which are hedge funds under $20 billion, they're still net short. And when I show this, it's still staggering to me. It's not a 10-year short. It's not a 15-year short. It's not a 20-year short. Okay, it's a 40-year short. That's how far this alt link goes back. It only goes back 40 years. So this is the shortest. If you look at where you are now, besides that pandemic level, right, that you can see in the box, this is the shortest that these people have ever been. You do not have a global financial crisis. You do not have a global pandemic. And this group of funds is more short now than they've ever been in 40 years of history. How long do you think that's going to be sustainable, right? And go look at the CFTC data that we showed on Saturday and how they're already starting to panic and cover. We're not even net on the position yet. They're not even zeroed out on the position, right? They're still net short. Now, in front of us, before we drill into exactly what's going on here, and again, please comment on this mic. I think it sounds fine, but I'm listening to it in my earpiece. So if it's different, again, I'm not going to have time to look with it and play with it. And I do read all your comments and I do respond. So the weekday videos, we're going to keep them concise and packed with data. And then the weekend video Saturday, that's going to be our big piece. These are all connected. That's why I suggest that you watch each one. And I do appreciate you sharing them. It means a lot to me. That's why I'm doing this, so that people can learn what it really takes to be successful at trading. So you see these levels down here. This is just telling you the spread between smart money and dumb money. And when you get down here, you always hear this thing of going, oh, well, as soon as you're at this level, well, that just means that now that you're here, well, we surely, those spreads, when they're that wide, that's when we have to sell. And then you start looking at what that meant and going, okay, well, that kind of made sense, right? Here's the problem with that. It works until it doesn't work. So what you have to realize, and this is what you have to look at with this kind of data. You have to look at this data and go, okay, this is down because dumb money, and we don't refer to it as dumb money, right? We refer to it as what? Retail, okay. We don't refer to this as smart money. We refer to it as institutions. There's a reason for that, right? We don't want to be stuck with their labels. We want to focus on what the data is actually telling us. So we see these lines right here. Okay, well, this is something called the pandemic, right? And look at where we were during the pandemic and look how smart money and dumb money differentiated there, right? And should you have used this as a sell signal? Should you have gotten out of the market in January 2021 because institutions were out of positions and retail was buying? Is that a good time? Or should you have gotten in here when retail was really kind of differentiating and institutions were their longest? And you can see what I'm talking about here. Smart money, which again, we don't refer to it that, we refer to it as institutions. We refer to this as retail. Now, if you take a look at this, okay, this entire time, the blue line is, quote, smart money. Okay, and they are completely underinvested, while the whole way up, who's invested? Retail. Okay, they completely underperformed this year, okay, during 2021. Then you get to their peaks. This is peak investment for, quote, smart money. How'd that work out for them? Okay, not very well, right? Meanwhile, who's selling? Retail is selling the whole time. Now, why am I showing you this? Because once again, they're out of position. Once again, they're out of position. Now, people say, well, quote, smart money is selling. Okay, well, I just showed you that they are net short the most they've ever been, under $20 billion. Do you want to go with that bet? Because right now, that bet's crushing them. The average hedge fund is up 4% on the year. How do you think that's going to go with their limited partners at the end of this quarter when they see those statements? Not very well. It's going to be a problem. So now you're starting to see us up here now. And I refer to as us is because dumb money, quote, retail is pretty much anybody under $1 billion. Now, if you look at it from this perspective, right, you do hit a point where you're going like, well, where are you going to go? I don't know. I have no idea how long this goes on for, how long we stay up here. Just as long as when you're overbought, you don't know, right? But for this period in time, you were up here for a good 6 months. So I would not rule this out. And to me, this just provides an opportunity that says institutions are going to have to step back in at some point. Maybe not until there's a correction. And I really want to hammer that point home. I'm not saying we're going straight up, right? What I'm saying is that you're facing an opportunity here that you probably have not seen in my opinion, you really haven't seen it for 2 decades. Now, if you'd like to join us tomorrow, we will be live pre-market for CPI. We're also going to do a special edition and go live Wednesday for the Fed rate hike and also for the speech. It'll be fun. Usually we trade right through it. I just want to point this graph out. So this graph is not something I did. This is from JP Morgan. And instead of going through the same data that everybody else is going to go through and pointing out the numbers, I just want to point out and be Captain Obvious. So when we started hitting January and things started getting, quote, overheated, we started getting inflation surprises to the upside. We started getting inflation surprises to the upside, meaning you're looking for 5% and you come in at 5.25, something like that. Well, what's starting to happen now? Okay, now what are you getting? You're getting surprises to the downside. CPI is tomorrow. If we don't get a surprise to the downside or we're not flat, it will be bad for the market. We can all speculate on what the number is going to be. Rents supposedly have gotten substantially weaker. I don't know really where they're getting their data from, but that's what they're saying. So that is a big chunk of it. We'll see. We'll see what the number is. The number is the number. There's nothing we can do about it. We can debate it. We can do anything we want. But I think it's important to just understand what's happening. And if you go take a look at Japan today and see what's going on there, their PPI came in and it was substantially lower. So I just want to leave you with this so that you understand. Okay, we're not going to go straight up, right? So NVIDIA comes out with earnings and then we pull back. This is overbought. Okay, and I know people will say, oh, I don't use RSI. RSI doesn't work. I'm going to say the same thing that I always say. Every tool that you use is no different than in the hands of a carpenter, right? Some carpenters are really good with a hammer. Some are not good with a hammer. They're better with a screwdriver. You need to use what works for you. This works for me because it's very clear to me. But when you're this overbought, and there were some other things here as well. Remember, we were over by the 3rd standard deviation on the Bollinger Band here, right? You can go back and watch that video about, I think it was about a week ago, 2 weeks ago, actually, by the looks of where this is. So all we did was work off the overbought, come right across to that 50 line, hold the 50, and now we're back here. Now, what is the difference? The difference is we're nowhere near as overbought as we once were, and now we're going even higher. I would not rule out semiconductors starting to lead again. Have a good night, everybody.